Well, Larry Fink is speaking on a variety of different topics. This is at the Deutsche Bank Global Financial Services Investor Conference, and he is making some comments about the timing of the Fed's rate increase. Listen to what he had to say.
I think we're going to see a more divergent world, and this is what I'm more concerned about, a more divergent world that is going to create more instability worldwide. And this is not maybe in the next 12 months, but over the next 5 years. We are going to have action by the Federal Reserve. I think it will be September. I think it will be just the beginning of a long, slow normalization. And I think by January, February, we'll see Bank of England following up.
So, again, there, Fink says he sees the Fed acting in September, hasn't wavered from that. A lot of investors have sort of been changing expectations based on the data, and the Bank of England will follow suit in January or February. All of that said, just looking at some of the other headlines here, he says he does like stocks. He likes European equities for the next 12 months. He says own them. Don't fall in love with them, however, because he doesn't think the situation in Europe is fixed. He also likes Chinese and Japanese equities. He is, quote, not frightened of U.S. equities. His allocation to U.S. equities is, quote, fine. He does see the Fed inhibited, he says, by the value of the U.S. dollar. He also says he thinks the Federal Reserve should ask why the consumer is not consuming right now. We definitely have seen some consumption numbers, most particularly those personal spending numbers yesterday for the month of April, showing no change, basically a stagnation in spending. So interesting headlines. We'll continue to monitor what he says at that conference.